Hello, and welcome to your Employee Benefits Open Enrollment Guide. Employee benefits are a vital part of most people's overall financial planning. Insurance helps protect things we aren't able to afford to pay for when something unplanned happens. The group benefits that are offered to you in Gainesville City Schools are among the most affordable and easiest ways to purchase protection against major risks we all face. As we go through this presentation, consider your situation and where any gaps may be present. And as always, you can access this information in your Employee Benefits Center at mygcssbenefits.com. There are 4 critical areas most people should be thinking about when electing their benefit coverage. The first and most essential benefit to have is health insurance. Fortunately for you, the state of Georgia offers high-quality, affordable plans. Go to mygcssbenefits.com for more information on these health options. The second important area is protecting your income through disability insurance. Losing an income for even a short amount of time can devastate many people and families, and it's vital to protect against this risk. Gainesville City Schools offers employees income protection with long-term disability coverage. Long-term disability will begin after the greater of 90 days or the exhaustion of sick leave and pay to normal Social Security retirement age. Depending on how much sick leave and savings you have or don't have, long-term disability is highly recommended to most people who have under 25 years of service and are under the age of 65. The third most important benefit is life insurance. Think you don't need life insurance? Think again. It may seem like an unnecessary expense, but there are many reasons to have life insurance, even if you're not supporting a family. For instance, final expenses. You've seen the commercials. Funeral expenses, debts, medical bills can add up to a hefty amount. The last thing you want is for your loved ones to shoulder this extra burden. Also, consider that if you're married, you and your significant other may have planned for a future based on 2 incomes. But what if one of you passes away unexpectedly? Life insurance can be used to replace the lost income so the survivor can maintain the same standard of living, maybe even pass on an estate. There are 2 types of life insurance, term and permanent. Term insurance is usually the most affordable early in life, but the price increases as you get older. It's meant to provide higher death benefit needs during younger ages when you have higher financial obligations. Your voluntary group term life, accidental death, and dismemberment insurance allows you the opportunity to purchase up to 5 times your annual salary, up to $200,000. Spouses and children are also eligible for this benefit. It's important to note, each year you and your spouse will be given the opportunity to increase your life in AD&D coverage. If you're already enrolled in the plan at any level, you can purchase additional amounts up to the guarantee issued limits without answering health questions. If you're not currently enrolled, any election will require a medical questionnaire. So consider enrolling in this coverage, even if for a small amount. Permanent life insurance is generally more expensive today, but it's designed for you to have the rest of your life. It should typically be used when you have permanent or long-term financial obligations, like final expenses that you desire to cover elsewhere with insurance. Unlike your term insurance, it comes with guaranteed level premiums and death benefits and cash value accumulation inside the policies. You're also able to carry it with you even if you leave the school system. And these policies are also available to spouses and children as well. The fourth most vital area to cover is your savings. We want to encourage you to set up an emergency fund, around 3 months of expenses that you can access in the event of an emergency. After that, move that to retirement funds. This can be done through savings accounts, 403(b)s, IRAs, even credit unions. However you choose, have some type of systematic savings plan where you pay yourself first. Now let's go on to your other benefits. We're excited to bring you dental health care through a unique plan from Simple. This is a dental plan that is a direct reimbursement plan, which means the plan is directly funded by the employees of Gainesville City Schools. With both plans, all procedures are covered except cosmetic care, and you can choose any licensed dental care provider. There are no limitations based on age, frequency of care, or pre-existing conditions. Employees have a premium and standard plan to choose from. The premium plan will pay 100% of the first $150 of expenses. After that, the plan pays 70% of the next $100. Then the plan pays 50% of the next $1,560 up to the annual maximum of $1,000 per person per plan year. Orthodontics is covered for children with the premium plan. With the standard plan, you're reimbursed 100% for the first $100 of expenses, then 50% of the next $1,800 up to the annual maximum of $1,000 per person per plan year. This option does not have an orthodontic benefit. Vision care is available through United Healthcare Vision. By seeing a provider that's in the United Healthcare Vision network, you can receive vision exams from preferred providers for a $10 copay and lenses and frames every year after a $20 materials copay. In lieu of glasses, you can get contacts. Standard progressive lenses are covered in full, and other optional lens upgrades may be offered at a discount. Last, if you're looking for some creative ways to save money this year, you may consider having a flexible spending account, or FSA. There are two types of FSAs, healthcare and dependent care. A healthcare flexible spending account allows you to put pre-tax dollars into an account to be used to pay for eligible expenses not reimbursed by insurance plans. Things like deductibles, prescriptions, even LASIK surgery. When you incur those expenses, simply give your FSA credit card to the provider and that qualifying expense will be paid from your account. Dependent care FSAs allow out-of-pocket qualifying dependent care expenses, like your kid's licensed daycare, to be eligible for reimbursement if it is for dependents claimed on your federal income tax return. Flexible spending accounts are a way to save on taxes for things you're already paying for. One important point to remember is the use it or lose it rule. Should you elect an annual dollar amount and don't submit enough qualified expenses to cover those dollars, you'll have money left in the account at the end of the plan year. Those dollars will be forfeited to your employer by law. So just be sure your election amount will have sufficient expenses out of pocket to cover them. Information provided in this presentation is a highlight of decisions you should consider for the upcoming plan year. For more detailed information regarding these and other plans, please refer to the plan documents with complete details at mygcssbenefits.com. Well, that wraps it up. Make this a great enrollment. Again, the simplest place to start is at, you guessed it, mygcssbenefits.com. We appreciate all you do and thank you for spending your valuable time with us.